Good morning, everyone. Good morning, good morning. Welcome to the tradingsyndicate.org, and I am JJ. And welcome to Wednesday the 9th, our Globex session. How's everybody doing? Hey, Johnny. How's things in Guam? Good to see you. So we'll start out by looking at basically we're in a bit of a balance area. Um, we are still in Monday's range. Now, what's interesting about Monday is here we have what we call a poor low. That means that there was quite a bit of buying, competitive buying here. And the liquidation we experienced on Monday ended very abruptly. Welcome to the folks on YouTube. Hey, Summer, how are you doing? Yesterday we had a perfect inside day. Um, Peter Resnicek, I think he calls this a tattoo profile because it's like a perfect profile and it's got a perfect point of control. Very choppy, very inside. Same thing with tonight as well. Very choppy. It's inside. We did do a little look below yesterday's low and came back up. So what do we expect again? I expect more chop back and forth. And what I'm expecting is until we take out that level at 62.44 or we take out 63.09, I don't think we're going to get any change. And I think we're just going to do this in sometimes tighter ranges and sometimes larger ranges. Um, the market is now just digesting this move higher. Um, we did fill the gap, which is healthy, but we still have gaps underneath us, and we have this very, very poor structure. Now, what does that mean? Poor structure is when a market, usually markets will go like this, move higher, right? But when markets kind of go straight like that, they don't really leave a lot of foundation. So when they do fall apart, if we took out 62.30, it wouldn't really take us long to come back to 61.86. That's what I'm saying. There's no trading history here to soften the blow if this thing falls apart. And also, if you look at the move down, if we take out 61.86, it's really not much. There's nothing here to protect the market from just collapsing back down to 6,065. Now, that may sound alarmist, but that's the structure that we've built. The thing is, these markets are really not designed to sell off. And I've done YouTube videos specifically on the structure of U.S. capital markets, how they're structured. And if you look at how they're structured, they're really not meant to fall apart. They're meant to be marked up. Hey, Petra, how are you? Hey, Raj. Good morning. So the reason they don't fall apart is there is an inherent built-in lack of supply in the large stocks that make up the S&P. For example, Apple. If you look at Apple, it's got 15 billion shares available to trade, of which less than 70, 80 million shares trade every day. So that less than 1% of the stock available to trade actually trades. The rest of it is warehoused by money management companies like BlackRock and Fidelity, etc. And that stock is held for 30 years. So it doesn't get traded every day. And it's sure as hell not subject to margin calls because it's paid for in cash. So it's a different market. There is not a lot of profit taking. The profit taking takes place from speculators like ourselves and larger traders and small hedge funds that speculate. And right now, if you were a swing long, after that 4th of July markup where we went up to 63.29, there's really no reason to sell the market right now, right? Oh, yeah. That reminds me, yeah, Apple is like a fund. You know, I had this, it's weird when you dream about this business. I had this weird dream that Apple is like crumbling from the inside. Just so I just go and alarm everybody, right? But really, I don't think the company's really doing much lately. It's like selling some phones, but I don't know. That VR headset was a flop, right? I don't know. I'm not sure about Apple, Raj. I don't know. Doesn't they spend money like crazy, and it's a good thing they've got tons of cash. But I don't know about their long-term future. How's that for blasphemy, eh? On a Wednesday morning? Is that everybody woken up? Oh boy. So, okay, back to work. I think we're just going to go sideways. And then when you go sideways, two things can happen. One is that you put enough people long over, say, 62.50, 62.40, that they get trapped and they start to sell and we'll get some liquidation. That's the first normal, obvious scenario. This market has an annoying habit of going up, sticking, and then going sideways. And that sideways action, what happens is the large traders go, well, crap, it's not going down. We have all this money we have to put to work. Let's go buy something. And when they go start to buy, the market moves up again. So we have multiple gaps underneath us this year that have not filled. Um, that's nothing new, right? We have gap, gap, another gap here. Unfilled gaps, we have three massive unfilled gaps underneath us, and they're quite a ways away. So I think sideways and trade the edges are uh, the first scenario, Howard, is over time that we go sideways in a range like this. People get trapped long, and then we get some liquidation. That's the first scenario. That's like the normal, obvious scenario. This market, unfortunately, tends to go sideways, and because it doesn't liquidate, people start to buy because they see price stability, and that's the second scenario. But in the meantime, I just think sideways in Monday's range. Until we get a break of Monday's high or Monday's low, no change. So how do we trade that? Well, a lot of people hate trading what they call bracketed markets or balanced markets or sideways markets. I love trading a sideways market because we have boundaries. Boundaries help us manage our risk. So all we have to do is find a nice rotation like we did yesterday and just trade it back and forth. And I love that because your risk is very measured. Your expectations, you don't have to have these crazy breakout expectations, right? So you're not chasing breakouts. You simply wait for the look below and fail, right? Look above and fail, and you just trade from the outside in, right? So the market does a look below and fail. You go long a little bit. Now, of course, it's not exciting, but I like making money in a calm, boring manner, right? If you want exciting, do some bungee jumping, you know, go take a motorcycle and drive it at 180 miles an hour, that kind of stuff. I like my trading to be boring. And this way, you can really manage your risk. Now, let's see what we've got. My balance zone is a little smaller this morning because we got a tighter range. So it's 62.64 quarter to 67 and 3/4. And we're just underneath VWAP now. Overnight inventory is short because the bulk of the trading is underneath yesterday's close. So we're looking for some kind of correction upwards. Right now, we don't have a lot of people in the store, right? What does that mean? That means there's not that much order flow. So when you look at markets and you see tight ranges in candles and this kind of chop, you manage your expectations by going, hey, you know what? If I do take a trade, I'm not going to expect too much, right? I think we have Fed minutes today. I think that's really the only major news. I think we got some news tomorrow. It's going to be a fairly slow week, right? It's the week after the 4th, right? Next week, more people will come back into the office. Those pesky portfolio managers will start putting their pods together and figuring out what they're going to do for the quarter, right? And start running their models. Hey, LJP trader, right? And then of course we have the Dennis the Menace factor, right? We have the president, you know. Is that an FOMC meeting or is it just Fed minutes? I think it's just Fed minutes, Johnny. I might be wrong. I'll double check that. So, not a lot on tap. Not much going on. Still the lazy days of summer. Yesterday there were some not bad trades, you know. I did okay. Yesterday was the first day that I got to put some size in. Well, not a lot of size, but I mean over 5 contracts in the E-mini on one trade. And that was okay. And that's the first day that I've been actually able to sort of get it together in a week or two, right? The last couple of weeks, it was a horrible month end, and I didn't expect to make a lot of money during month end, so I was kind of scalping here, scalping there. And a lot of the times I just, I didn't really have the ambition to trade. And when I'm like that, I'll just kind of stay away. Otherwise, you end up forcing things and losing money. I like to be really zoned in when I'm trading. If I'm not, I don't see a reason to just throw money away. Unless I really see a trade, unless I really see my setup present itself. Like right now, on paper, this looks like a look below and fail, right? There's the look below, there's the fail. So if you did buy this, right, say you bought it at 65, put your stop at 64/4, right? Now you know VWAP is up here before your target, okay? So are you expecting a huge move higher if you're long? Well, not really, are you? Hey, John, right? What is common sense telling you? Common sense is telling you that there's a seller at VWAP, right? Everybody with me? So if you are long, boom, that's where you'd be getting out. See? So if you went long 65, you're looking for 67. Anything over 67 is a bit of a gift. Does that make sense? And that's how you manage your expectations. Now, when we get to VWAP, they're going to sell into it because every computer program is programmed to sell VWAP. Right? Unless there's a huge amount of buying here, the offers won't lift over VWAP because they have to capture the buying that's in the market at the time. You can't expect somebody to pay $1,000 for a television set if they're only willing to pay $600. You have to sell the TV at $600. Otherwise, you're stuck with a bunch of inventory that's burning a hole in your bank account. Does that make sense? Right? The chart is just a sales chart. So the way to hold trades longer in this market, what you would do is you would build a position between 64 and a quarter and say 66. And you'd have to be prepared to hold that position for some time. Right? And if you did, you would have to know how to manage that trade. What trade did I take with a bit of size? It was just a look below and fail VS squad. It was, where was it? It was way back here. I do believe it was, what time did I take that trade at? It was around here. It was this look below and fail. It was a look below and fail here. And I took it with 80 minis. I sold half of them here and then half of them here. It's not really a glamorous trade, but you know, ones that pay. And like I tell people, listen, if you make 3 points on one E-mini, do the math. Right? That's $150. Right? If you do it on 3 contracts, that's $450. You know, you do it on 6, it's $900. You don't have to trade huge ranges to make a living. VWAP is the standard for every size trader's inventory adjustment. Right? VWAP was created in the 1980s by a brokerage firm called Abel Noser. They used it to measure traders' efficiency on how well they could price their. If I give you an order, can you get me good prices? VWAP is the institutional benchmark. So if you give me an order to sell 1 million shares of stock, I want to get you prices above VWAP. If you tell me to buy 1 million shares of stock, I want to get you prices below VWAP. So we're seeing some buying and the offers are lifting. So if you still have a couple of runners from that 65 long, there's 67 and 3/4, the top of the zone. Right? So VS Squad, getting back to the trade, all I do is I do the look below and fail, because shorting this market is a real pain in the butt. So I really like the look below and fail, especially when we've got tons of people trapped short underneath. You know, there's bids, right? So why not go long? If you know everybody's short and trying to buy a market, doesn't it make tactical sense, business sense, to take longs and let them push your product price higher? If you're still long, you're looking for sellers at 69 and a quarter. Right? Your trades should make business sense. If they don't, you need to figure out why. Right? Nothing is random. If anybody tells you that markets are random, it's because they're not pushing size or they're not working size. Because if you're my client and you tell me to move 1 million shares of stock and I get you crappy prices and I try and pawn it off and tell you that it's random, uh, I'm going to be very, very unemployed very quickly. Right? And that's what there's a sense of urgency that chart-based trading and retail trading doesn't get to experience. You don't have a client screaming in your ear because you've gotten him a bad fill, right? If retail traders had a bit more of a sense of urgency, they wouldn't make the mistakes that they do. They would treat this more like a business than a lottery or a slot machine. So inventory is correcting upwards off this K period. Now London's going to open in 8 minutes. If London can't get any lower, the way the market's reacting, now just off the first 20 minutes that we've been watching, don't be surprised if we go and take out that 62.73 stop because inventory is quite short. And so far, I'm not seeing a lot of sellers. I don't understand that question. Is the inventory of market makers a unilateral risk exposure? I don't understand the question. Sorry. It's a bit above my pay grade. And I don't really know how it affects how we make money. Not to, you know, I want you guys to ask questions, but just try and remember, is my question actually going to help me make money? Right? Can you maybe break it down a bit more, Summer? I have no idea what you're talking about. I don't know what unilateral risk exposure is. If you want to read up about risk, there's a really good website called risk.net if you're really into that stuff. And it's all about risk and risk management, that sort of stuff. As we're taking the stops, inventory is correcting higher. What's up, Mike? There we go. I just told you, right? I told you we're going to start taking out the upper stops, and it's happening even before London opens, right? How did I know that? Because of this move here and how quickly we got over VWAP and how there was barely any resistance at VWAP. This is what happens when you pay attention to the market. It will speak to you if you pay attention, right? But if you're thinking about all sorts of useless crap, right, you're not going to pay attention to what's really important. And I think really that's the lesson of the night, right? Pay attention. We were expecting more selling at 67. There wasn't. That means that there's bids. Why are there bids? That's short covering, right? Pay attention to what's important. If you do, right, don't worry about what the market makers are doing. Don't worry about, all this crap you hear on the internet. Pay attention to the chart, right? It's not a book, it's a website called risk.net. And it's absolutely useless to you as a retail trader. Just so you know. But they were asking, yeah. That's great, Summer, but how does that help us make any money? Yeah, exactly, John. Right? That's exactly how you pay attention and make that work for you. So if you had a couple of runners, right? Say you had 5 contracts and you sold 2 at VWAP and you had 2 or 3 contracts left. If you saw it rip through VWAP like that, then you know that there's strong bids, right? Try and focus people on how you're actually going to make money. No, it doesn't show up on the DOM, Mr. Meteor. That's great, Summer. That's great. My intention on these YouTube broadcasts and what we do at the Trading Syndicate is I want to take regular people and I want to help them make money, right? I want people who spend time in front of the computer, who spend time away from their family, who dedicate a lot of time to this. I'd like them to actually make some money instead of just pontificating about market making and stuff, right? I would never trade 80 micros, Shark. It's great you want to know more about the market. There's a lot of resources. I'm trying to help people make money trading, not to be rude, but I want people to be able to take practical information, right? So unilateral risk is not practical information, right? Shark, stay on point, okay, brother? It was 8 minis, okay? Guys, don't get now you guys are like chasing a gopher down a hole in the room, okay? Stay on point, okay? Back to reality, okay? All right, get back to reality. Did I say 80? I said 8 minis. Sorry, right? If you were trading size, a little bit of size, you'd sell some. I think I was trying to answer John's question, right? So if you're trading a little bit of size and you're paying attention and you see the market rip through VOX, stay on what's practical, guys. Okay, stay on what's practical. Okay, don't get distracted by all this stuff. Okay, stay on point. Come on now. All right, you're not a bunch of kindergarten kids that are hopped up on cereal. Okay, what did I say? 62.73. Why? Because inventory is adjusting higher. Why? Right? Because the position under VWAP and under 62.67 is locked up. So now we're into distribution, right? Stay on point. Try and make the time that you spend doing this valuable in that you can actually profit off of it. It's a business, right? Stay on point. Don't go all off chasing waterfalls, okay? Right? If I said 80, I apologize, right? I've never ever spoken about trading an 880 minis. So, Shark, just remember those things, okay? Now the candles are getting smaller here, so we're distributing. If we run out of sellers, we're going to drop back down to 62.69, okay? So that's quite a move from 64 up through 67 on a slow night, right? That tells us valuable information. It also tells you not to short the thing, right? So if you're not long and you're like floundering for a trade, right? Don't short it. And what did I say earlier, John? What's the target? 62.73. Nice work, Moran. Way to focus, right? She's long 65 and she's going to sell into this strength. That's well done, right? You pay attention, take the trade, right? Pay attention, take the trade. Well done. Beautiful, right? They front run 73. Right? Yeah, that's what I've been saying all along, Mike. We use the stops for targets, right? We use either the levels on the 1 minute chart or the stops. Good, good, right? So a little front running before 73. If I was targeting 73 and I was long, I'd be out here. Right? I can see that they're front running 73, so I would hit the bid and be gone. Thanks very much. That's a nice trade. It's a beautiful trade. 65 to 70, 71. You're killing it, Moran. See, now she is someone who pays attention. And she doesn't get sucked into all this crosstalk, right? And that is essential, right? Really essential. Yeah, so wholesale has been accumulating underneath 70. Now it's going to distribute, or I'd say 67, or definitely under VWAP, right? Because that's the business. You accumulate under VWAP, you distribute above. Nice work. 5 points is beautiful, right? Really well done. Really well done. Way to focus in there. Love to see it. The move's already happened. It front ran the London Open. Right? So you want to write that down in your journal, Shark. Right? The move already front ran London Open. Right? The move happened in K period. Right? If we can stay above yesterday's close, you're right, Aaron. If we can stay above 72, 70, 72 and a half, we can generate enough buying to take out that 73 stop. If we can't, we're going to rotate back down to find buyers at lower levels, right? Because the buying might just run out here, right? And now we have to have a little sale, right? Attention Kmart shoppers. For the next 10 minutes, ES is on sale under 62.70. And that might bring in so that might bring in some customers, right? So when markets move up and then pull back, it allows people to get in there and buy a little cheaper. So they feel like they're getting a deal, right? People love to feel like they're getting a deal. Right? Now we've got distribution. That's why these candles are all tight. Right? Now we're going to have a little blue light special sale. Let's see. We're going to find the next set of buyers. See, there's a little bit of a sale. This is what we call a backfill, right? You take the market up, that creates demand. You go back and you fill in that demand with supply. When you find large buyers, you stop selling and raise prices and they should follow you. If they don't, then of course you have to capture the buying, right? If you ask me what the purpose of a market is, everyone's got a different answer. My answer is to capture the buying. So if you tell me what the purpose, why is there a market? So I can sell 20 million shares of stock and capture the buying. Markets are about distribution, right? It's about moving something off the smart money hands into the retail flow. Once again, Summer, that's great. I guess you're writing like some sort of a white paper or something like that. But where's the bid? No, John. No. John, you and I need to have a conversation when you have time. Let me know when you're up later on tonight. We still haven't done a call. I'll have time later on when you're up. So we're down through 69 now, right? And we're going to slow down right around VWAP because there are going to be some bids. Now let's see if we get back up over 69. If we can't, we're going to sell off underneath VWAP. So any of you who are short over like 70, 71, right, you're looking for a 67, 68 cover. Oh, you took the other side too. Nice work, Moran. Well done. Right, you got a little bit of front running before VWAP, and that's why it's bid at 68 and a quarter, 68 half. So if you were short 70, 71, maybe put a 68 and a half bid in, right? And if that bid doesn't get filled, then you know that there's nobody that needs to sell at 68 and a half. If nobody needs to sell at 68 and a half, what does that tell you? Right? Think through your trades. If you understand why the trades are happening, think through them. There you go. Nice work. Well done. Well done. So there's a seller at 69 quarter. Your 68 and a half bid would get filled. And if I was still short, my next bid would be 68. Right? And if you're still short, then just maybe a tick above VWAP. So it's nice. We got a two-sided market tonight, right? We had a nice move up, now a nice counter inventory move down, right? If it stays like this through the rest of the morning, it'll be great. Be some nice two-sided trades, right? Sweet. And we're back to VWAP. Back to the garage. If we stay under 67 and three quarter, your target is 64 and a quarter. Nice. So folks, what we try and do in our room at the Trading Syndicate, come visit us, use the 25% off code. We'll help you pass those trading evaluations to use prop firms like our friends at Apex, okay? And we'll give you practical information that you can use to actually make money, right? I think traders are tired. I would be tired of all this useless information, tired of not making money, tired of blowing up evaluation accounts. If you're tired of all those things, if you're tired of people talking about stuff that's not showing you results, right? Come visit us, right? Of what, Howard? Not yet, not yet. Only if we get back over 68, Howard, right? The market's still moving lower, and it's working out VWAP, right? So, if you're tired of just, people talking about things like gamma levels and you're not making any money, come visit us, right? I myself am tired of hearing about stuff that doesn't make people money, right? If you're going to do this and you're going to sit in front of these computers and you're going to sacrifice your time and energy, you might as well get paid for it. And that's what our focus is. Our focus is to help you get paid. Because other than that, what's the point? Like, what is the point of doing this? Like, we can talk about all sorts of stuff. And I don't mean to beat people up who are asking questions, but try and make your questions relevant about how you are actually going to build a business plan to take advantage of the business and actually understand the transactions that you're trying to profit from. If you don't understand the business that you're working in, right, and you don't have to know about market makers and their risk, unless you're working at a market maker, in which case they will teach you, right? If you're a retail trader and you're trying to pay your rent, right, you're trying to pay your phone bill, right, and you want practical information, a practical way to make money, a practical way to manage risk, come visit us at the Trading Syndicate. You will not be disappointed because we don't pontificate, we don't talk a bunch of double talk. We tell you why the trade works, why you should take the trade, right? What is the reason for you taking the trade, right? Your risk is where the trade stops working. When the trade stops making business sense, that's when you're out of the transaction, right? Every trade is a business transaction. There has to be a legitimate reason for taking it. So if I was short and now I see that offer lifting, that means the sellers have seen buyers and they're raising price. So it might be a good time to cover a little bit here at VWAP, right? Say I was short 70 or 71, 70 and a half, and I covered some at 69, I covered some at 68. I would close the trade here because I see it slowing down. Book the profit, right? You want to make the time that you spend doing this count, right? You want to have information that you can use in a practical way that makes common sense. If it doesn't make common sense, why are you wasting your time with it? What is the point, right? See how the now Howard, it's starting to show life, but it's still not a look below and fail. Are you with me? Are you using my levels or are you using your own? You still there? See how it's showing life now? There you go. Right? Might be a little early, but there's your look below and fail. Do you see how it took like 3 or 4 minutes, Howard? I think he's gone. So, as an informed trader, if you're going long at 68, you know there's going to be sellers at 69 and 70. So you might want to wait until the market clears 69. Right? See how it's going back and forth over that level now? So we still have sellers that are front running 69. That's why I've got that white line drawn there. Right? So you can kind of chill out. Right? And listen, not for nothing. I've taken this trade and gotten stopped out. That's something that you learn after a liquidation. If the market kind of slows down and we already had that big move, it might futz around now and kind of do this, where there's no trade, right? And that's another thing, right? Sometimes you miss the up move, sometimes you miss the down move, and then it's chop. So a lot of traders, and I know I've done this myself, you miss the up move up, you miss the short down. Now Moran nailed both those trades, right? But say you're like, oh God, I missed the long, I missed the short. What do I do now? And you're anxious to transact because you feel like you've missed out. Don't. Now's the time where you think like a professional and sit back and assess the market and wait for the next opportunity. And you should not care at all if you miss those trades, right? Just roll right off you, right? And just keep focused. Focus, focus, focus. Don't lose focus. Now it's showing signs of life again. So now let's see if we can creep over 69, because if we can creep over 69, Howard, it's telling us that the liquidation is over, right? So this is what you want to be watching. Remember how I told you to watch markets sometimes instead of trading them? And you'll start to get a feel of the order flow at different times, right? You'll start to get a feel of how the candles, the size of the candles, all of those things. So last time we had a seller at 68 and 3/4. Let's see if we can get up and take the top of that candle here and get over the white line. Let's make this bigger. There you go. See? So where's the next seller going to be? Well, probably be up here. At 70, right? That's where Mike's targeting. There might be a little selling here at 69.5. But 70, the top of each candle is where the seller's initiated on the way down. So there you go, Howard. There's your entry. There's your stop, right? But you had to wait through this. And this is the hard part. Waiting through this. But you're getting it, right? You called it, you're just a little early. And that's okay. Now all you got to do is adjust your timing, you see? There you go. Nice. Nice. Right? Well done. It's not easy doing this. It took me years to figure out the look below and fail, right? And I've screwed this trade up so many times because I always trade way too early, right? I always get sucked in here. And then I get stopped out, and then the trade works, right? That's typical JJ, right? There we go. Got some bids. Got some bids. So that's good. Now let's see if we can get up and try that, tickle that 73. Do we have enough gas in the tank? The waiting sometimes feels like forever, right? Right? It's just, and especially if you screw up that trade a few times, it starts wearing down your mental. When you're learning how to do this, it really screws with your head, right? The financial stress, the overall mental health. Like when I started retail trading, I was horrible at it because I had no discipline. You know, I was doing business like I would do business institutionally, and that doesn't work in retail trading. So you had to like completely relearn everything, which is humiliating if you've been trading for 25 years and you try something new and it's not working, right? You start questioning all your life choices. I know what it's like. Everything that you guys go through, I've gone through. I'm not immune. We've all gone through the same spanking machine, maybe a few times, right? The only thing I haven't done is blown up accounts because I'm too cheap. But all the stress you guys have had, I feel the exact same thing, and that's why I really want to focus on practical information. So, okay, we caught a seller here right before our level, right? So they're front running 71.25. Now we're going to kind of suck back down here to 70 and see if we can hold that 69.5. Retail trading is one of the hardest jobs in finance because you have no support. You don't have a firm behind you. You don't have people who know what they're doing teaching you. You have no risk management skills. You don't even know what risk management is. You have no support at all. And that's what we try and build for you in our trading room. Yeah, retail trading is really annoying when you get stopped out a lot. I firmly agree, right? It starts to drive you nuts. You know, and there are some days, like, some days you trade like a god. The next day you go in there and you get stopped out 3 or 4 times and you're like, what the hell? It's well because the market has changed. The agenda has changed overnight and you haven't clued into it yet and learned how to adapt. That's another thing, right? So, right, changed again, right? We had a big range on Monday, Raj, and now we're in this tight inside range. It's okay, it'll change again, right? Good stuff, folks in the room. You guys are actually paying attention and transacting, and I like to see that. That's nice. Because I know it's been hard for some of you guys because I understand because it was hard for me. Yeah. Well, we've got August and then Labor Day, right, Mike? And then after Labor Day, we power through until Thanksgiving, right? Got to make up that second half of the year, right? Because after October, all you guys are thinking about one thing: bonus time in January, right? That's all you guys are thinking about, right? You've already got your what's the new fancy car that all the young cats want this year? McLaren, Ferrari. What are all you guys lusting after? What's on everybody's screensaver on the trade desks? Not that there's many humans left on trading desks. VW Golf, Cybertruck. Oh man, good stuff, Johnny. You just want a scooter? Well, you can ride a motorcycle all year round where you are. Oh. All right, folks. Thanks for being with us this morning. Appreciate you. Come visit us at the Trading Syndicate. I'm JJ. DM me anytime. I apologize if you've emailed me and I just responded late. I'm very sorry about that. But my email is vwaptrader1 at gmail.com. If you're interested in any sort of mentoring or if you any have questions, please reach out. We'll see you at 9 o'clock Eastern Time. Have a wonderful morning. Trade safe out there, okay? And as always, do not take candy from strange market makers. Thanks, folks. Have a great morning. We'll see you in a little bit. Bye for now.